to introduce Ralph Goicouria. He's a realtor and real estate investor in Miami. He's very successful, and I'm super excited to have him today on the show. How you doing, buddy?
I'm doing great, man. Thanks for having me.
Excellent, man. So, Ralph, we talked the other day, and I learned a lot about you. I know that you are a realtor and also a real estate investor in Miami. You're in the real estate investing part, you're more focused on the flipping homes. And also, I know as a realtor, you have been able to build a strong team with Keller Williams. So how about you introduce yourself, give us a little background.
So I've been in the real estate game since 2003. Bought my first property out of college with my mom's help. I house hacked the property, got a couple tenants. They helped me pay the mortgage.
Okay.
And then at that point, I was able to, propel my real estate career forward. Fast forward to 2005, I was full into my career in college. I was in IT, working for a company, helping them get all their systems up and running. From that point on, I realized I wanted to be in sales. I got my real estate license. Thinking maybe that's something I want to consider. Once I did that, I started a real estate career, which now we're going on year number 15 as a real estate agent. And about 4 years ago, or actually closer to 5 years ago, I decided that I wanted to get into real estate investing as a fix and flip end user. So we started that, and here we are.
Excellent, man. So when you said house hacking, like that's the first property that you purchased, right? So how did that work? Like, what exactly is the house hacking strategy? Because it's very interesting. I have heard about it a lot, and I think that's something very interesting that to mention today.
So, I mean, house hacking is a term I just heard of, like in the last couple of years, but back then they didn't call it house hacking. I got the idea from in college. We had roommates, and most apartment complexes you would rent out a 4-bedroom apartment or house, and you guys would split the rent. And typically, the rents were higher than the normal rent in a particular area, so it was fruitful for the landlord, and for the student, they were just happy to be off campus. So I got the idea originally from there. And I did the numbers, and I said, look, if I buy a house, my mortgage at the time was like, I don't know, I want to say $700. This is way back when real estate was a lot cheaper. And I figured if I can rent each room, I had 2 rooms at the time. If I can rent each room for $350, I can go ahead and cover my mortgage and essentially live rent free. And the idea was wait for a couple years to go by. And when the property appreciated, I would sell it for a profit. And then I would move on to my next deal. That was my initial house hack approach.
Nice, man. So what do you do? Did you end up selling the property?
Yes, I ended up selling my first property. So what I did was I rented it for a year. Meanwhile, I put a deposit in on another new construction house. That was the whole new construction real estate investing approach, which is basically put a deposit in, and by the time that house was done, it already appreciated in value. So I put a deposit down on another house. Once I did that, I moved into the new home. I rented out this home. And once the 2 years were up, where I can kind of take advantage of the capital gains break, I went ahead and sold it, made like an $80,000 profit. And I took half of that, gave it back to my mom, her original investment plus her profit. And I went ahead and rolled over my portion of it into the next deal.
Excellent, man. So then from there, I guess you just kept going. I know the other day you also mentioned that you got into the pre-construction business, and it was early in your career. Why don't you tell us a little bit about that?
So back to when I sold that property, I got into my next one. So then I said, okay, I'm onto something. So I started putting in, as I would move into my next home, I would put in a deposit on our new home, and it would take about a year to build. So my idea was I would just live in the home, get tenants, Then when the new house was ready, I'd move into the next home, rent that out with regular tenants, and then eventually I would build up my portfolio that way, and and have the cash based on the resale. The problem was I had no prior real estate or business experience. So my thought was it would just continue to go up forever. Worst thing that can happen is I would break even. Best thing that can happen is I would, make money. And so I did that over 7 properties, and then the crash came. So I tried. I'm sorry, that was 2007. So at that point, I was scrambling, trying to figure out, okay, what do I need to do to make this work? So I started to rent the properties out, but the rental rates were going down drastically because there was a ton of properties that were vacant. So very, very quickly, I was running a negative, I would say, deficit of about $15,000 a month just to keep these properties alive, from vacancies to taxes to HOAs to mortgages. I had the worst mortgages you can think of. I had 100% financing, 80/20 loans. I had amortization, or the 2-arm loans, where basically it would adjust after 2 years, every 6 months. So it just kind of started to, I was on a downward spiral, and I couldn't manage to continue to cash flow it. So at some point I had to make the decision to foreclose or short sale all of my properties. At the time it was 7, and essentially start from scratch. I mean, I had no credit, I had no properties, I had debt on my record, and all I had was the knowledge, which was now I was initiated into real estate, and now I had a set of skills. So I went out there and I just started working on helping people get out of the same situation that I was in, which was I'd help them negotiate a short sale. I'd help them list the property and sell it, even if it was at a loss. I did that as a realtor because I already had my license. So I did that, from at the peak of the short sale craze, I was, carrying about 80 properties as listings, helping people, and only 3 or 4 of them were selling. It was taking a year and a half to move these short sales at any given time. So fast forward to 2010, the short sales started to dry up. Everybody was kind of figuring a way out of their problem, and we started to get back into a normal market. In 2010, nobody thought the market would go up. They were just happy that it stopped going down. So at the time, I decided, this was in Orlando, where I went to college at UCF, and I stayed there, and I decided, you know what, I want to go ahead and I want to set the rest of my life back in Miami, where I grew up. So what better time than now? LeBron James decided to come down to Miami, so I went ahead and followed his footsteps, and we moved down here, and I started the whole real estate team all over again. And then the market started to get better, right? The market started to get better, and things were okay. And then all of a sudden, people started to have confidence again in real estate. So once that happened, I said, you know what? I love being a realtor. I'm good at it. At the time, we had sold in our career probably almost 800 properties. So I was like, okay, what can I do to parlay this skill set into, my business appetite that I had? I wanted to kind of do something entrepreneurial. So we got into the fix and flip business. This was at the end of 2014.
Wow. So that definitely was a big comeback, man, because going with 7 properties and then having to pretty much fail with almost all of them to then, react the way that you did and go into, okay, let's see how we can come back and fix the situation. And then you took it as a realtor. You started making up for the failing, the failing part that you had, which at the same time I wouldn't say was just failing. It was a learning experience that probably built you stronger and better. And then you had an experience that you knew that you didn't have to repeat later on, or you knew that you had to approach it in a different way. But I think it takes a lot to do that. I'm sure that during that time you have multiple feelings, but the comeback that you had is something that not everybody has. Not everybody is willing to react to that or can. but you did. Um, you're obviously a really good entrepreneur. Like the way that your business is right now, what you have built is super amazing, man. So I'm really happy for you on that. Let me ask you. So, um, if, let, how do you see the market? Like, what do you see coming? What is your opinion? Like, there is a lot of people that is concerned that the market is going to crash or it's going to go down. The prices are going to go down. Like, what do you feel or what do you think about that?
Well, I mean, what I think is that it's normal for the market to crash and go down, and it's good to a certain degree that people feel that way, because in 2007 nobody felt that way. Everybody thought it was going to go up and it would never go down. We never experienced a crash. What that taught me then, and it still teaches me now based on the last 15 years, is we can't really predict what the market's going to do, but we can certainly take a look at the signs of the market. I particularly like to look at inventory. I like to look at days in the market. I like to look at supply and demand. I like to look at the quality of the area versus what I have to offer. In other words, if I go into a neighborhood and there's 10 homes for sale, but 8 of them are overpriced and one of them is half decent, and I come in and I'm the most aggressively priced property and my house is completely renovated, then that doesn't really affect me as much. Now, if I go into a market and there's 10 properties, half of them are rehabbed, and 3 of them are a price that I can't compete with, I start to get a little worried. So what I'm seeing is I'm starting to see some signs of stabilization in some pockets, and then in other pockets, I'm seeing properties fly off the market. So I don't really see anything right now that is just kind of it's a flashing light that, hey, it's going to crash now. But I certainly see signs of similarity from the last crash. The amount of realtors and the amount of investors that are now in the market versus what was like the last 3 or 4 years is at an all-time high. People are in it for the sake of just making money, not because they think it's a good career or because they think they're going to make money without doing any work. So that is a similarity in the market. The other similarity that I see in the market is that in certain pockets, they're starting to have more inventory than they have properties being sold. And so the days in the market are starting to climb. And in some pockets, the days in the market are like, 4 or 5 months. So that's a little bit concerning. But what I do see is a fundamental difference from last time is I don't see lenders backing off and loosening their standards. Most investors that I know of are not using conventional financing unless they can back it up with a rental property that basically warrants its own financing and doesn't really, is that the investor has nothing to do with it, or the individual. So that part, they're kind of still digging their heels in. And that's what gives me confidence that if there is a correction, I don't think it's going to be more than 10, 20% versus last time we saw a 50, 60% correction.
Wow, which is a lot. Yeah.
So again, I don't know, but my bet is that the higher end or the mid cap market is going to take a hit sooner than the lower end, and everybody will be affected at some point. But I think we can still win in real estate, whether the market's going up or correcting itself, as long as we're able to position ourselves to have a plan B and to make adjustments as the market, shows us that it's changing.
Yeah, and the good news for you is that you had already been through that, so you kind of like you're already mentally prepared, and you, as you already said, you have a plan. So let me ask you this: you have you're flipping a lot of properties this last year. What does it take to build a structure for flipping properties the way that you're doing right now?
So I don't know if I'm flipping a lot of properties. I mean, last year we did 30 flips.
That's a
It
lot.
was
I think that's it
it's,
takes a
it's,
lot of
cer- it's
numbers.
certainly takes a lot of work and a lot of coordination to do 30. When you first look at it, you think, oh, the 30 is no big deal. Let's get to 50. Let's get to 100. But 30 was intense. There was a lot of administrative intensive tasks, dealing with contractors that back out on you, that walk out on you, that say they're doing things a certain way, and then when you're halfway into it, you have to start over. You have municipalities that take long to approve your permits because they're overwhelmed with the amount of permits being pulled. For example, roofs. So my suggestion is if you're going to get into flips, just figure out what value you're going to add by doing the flip. In other words, if the value add is I'm going to be able to provide a product that another buyer is not able to find in a specific area or marketplace, and so a product that they can be proud of and that they would want to move into at a reasonable price, then figure out what are you going to be good at. For me, it's finding the deal, it's creating the relationships and the networks on the front end, and then disposing of the property and realizing the profit on the back end. I'm not great at the details. I'm not great at project managing. I'm not great with the contractors. So I have a partner, and her job is solely to deal with everything in the middle. She works alongside of me when we price properties out because she has a tremendous amount of value when it comes to pricing and real estate experience. She's an appraiser of almost 30 years. She's been investing since the 90s. So she's got that backing, but we complement each other. And I think that's important in a partnership. You have to partner with someone. First off, you should partner with someone, I think, in order to be able to scale. And number two, partner with someone who offsets your weaknesses or the areas that you aren't great at or that you don't want to spend the time in because you feel that it just isn't fruitful. And then from there you devise a plan and you figure out, okay, what is it going to take to get to X? But you got to start with the first one. So that's exactly what we did back in 2014. We started with our first one. It took us 7 months. We had some hurdles. And then once we did the first one, we said, okay, well, what do we want to do now? Let's do 2 at a time. And 2 at a time turned into 3 at a time. And I remember feeling once we got to 7 that's it. We had made it, and there's no more. We don't want to do any more. But you quickly realize that, I mean, it sounds like a lot of deals, but in order to really run this as a business, you've got to have deals in the pipeline and you've got to have things in place to help you. You can't do it on your own. So that's what I would, let the people know. If you wanted to get into flipping, you're going to want to build a team.
Yeah, I totally agree with you. And also, when talking about partnerships, something that I would like to add is, to me, it's a big thing. Like all partners have to share the same vision or be very similar, because whenever the partners are going in 2 different directions, even though they start somewhere, but then they start going in different directions when the business starts going, when reality starts kicking in, then that's when there can be some issues. So in my opinion, like sharing the same vision is key. So everybody can be on track. Good times and bad times. So
Yeah, I agree. I think part of it is also when you're sharing the leadership role, you both can't lead. So
true. Yeah.
if you're both leading, you're going to lead yourself probably in a different direction. So you got to be able to defer the leadership when it's necessary, and you got to be comfortable that whoever is going to lead in a particular area, that they're going to lead you in a way where it's going to reach your goals and it's going to take you in the right direction. So I've been very fortunate to partner up in both of my businesses with people that when I do take the lead, they're supporting me 100%, and they almost kind of want to defer to me. And then there are times when they want to take the lead, and then I have to kind of take a back seat, and I have to be able to defer and support them. And if I can't do that, we have to sit down and regroup immediately, because the minute we start to both lead, that could be disastrous.
it can be a disaster. Yeah, it got to be humble to do that, and then also trust. In my opinion, those are two key factors there.
Absolutely.
But you're totally right, man. Now let's keep talking about the investing and flipping part. Finding deals. How hard it is to find deals right now, or how easy it is.
Well, I got to tell you, the first time I started, when I first started doing deals, it was I didn't realize that this was going to be a huge part of my business. I only had one way to do deals when we first started. We were buying at the auction. I had one connection, and he was basically controlling, what we saw, at what price we would get it at, so on and so forth, which I thought was fine. And we actually did okay with that model for about a year. And then all of a sudden that started to dry up. We started to get more problems at the auction. And we said, look, we can no longer do that. So I started to look for other ways to get deals. Now, being a realtor, every now and then I'd have a deal that I could present, but that was only like one every 3 or 4 months, or maybe every 6 months. It wasn't sustainable to support the business. So I started to go out there and create, I started to look around and see what can I do. So I came across wholesalers. I didn't know what a wholesaler was. In 2000, I want to say the first wholesale deal we ever did was the beginning of 2016. And we did it, and we were able to make money. And we're like, okay, this is, an option. So we dabbled, and then before you know it, fast forward, the auction completely dried up, and it forced us to now be completely dependent on either wholesalers or going and finding the deal ourselves. So we've done, direct marketing, we've done the SEO, pay-per-click, website, advertising, and we've also worked with several wholesalers. And it just all depends on, what type of relationship you have, and you kind of have to weed through the bad ones. There's a ton of wholesalers out there that just don't really have deals. They're just trying to convince you to buy one of their deals. They're giving you bad comps. They bought it too high because they don't have the skills to negotiate the deal at the right price, or they're just trying to be greedy and trying to get a huge payout. I'm all about making money, and a good payout I support, as long as I can buy the property and do what I have to do on my numbers. So I'm constantly looking for new wholesalers and new partners for the long haul. To do one deal with a wholesaler for me is kind of a break even. To find the wholesaler that I can do a deal with every few months is the goal. Create the partnership and the trust, and it goes both ways, because a wholesaler wants to be able to have a buyer that's going to commit, that's going to follow through. It's going to say when they say, hey, the wire was sent, it was actually sent. When they say, hey, I want a property at this price, it's actually that price. They're not going to try to renegotiate. When they send them to a property, that buyer is not going to try to go around them and go directly to the seller and try to negotiate directly with the seller. So there's a little bit of trust, and it can go both ways. And once you find that connection with a group of wholesalers or a wholesaler, then the dynamic changes, and it's more of now you're in partnership with them and not against them. Does that make sense?
Yeah, it makes total sense, man. It makes great sense. Now let me ask you, have you have any more, or let me go back a little bit with that question. Any bad deals? Any deals that have gone bad, that you had any issues, I don't know, problems with permits, got any delays with the rehab, any things like that?
Yeah, I've had all of the above. The question is how bad? And from a profitability standpoint, we've done about 87 fix and flips, and out of those 87, we've lost money. We've lost money on 2 of them. And both times that we lost money, it wasn't necessarily that we miscalculated the price we bought it at. It was more so something that popped up that we didn't really hedge for. The property took longer than expected on the market, or the city came over and hit us with a violation, or there was a delay at the city to clear the violation or to open a permit. So there's those issues, but it's certainly not the norm, and it's just part of doing business. So the way I look at it is you're going to lose money at some point, and when you do lose money, it's probably not going to be as bad as the next one. So just keep that in mind. We were fortunate to only lose, 5,000 here and 7,000 there, and that could have easily been 40,000. And maybe at some point we will lose 40,000 on a deal. It's part of the business. You can't always win. It's risk reward. We try to hedge that bet by really doing our homework and priding ourselves on being thorough. And the more flips that we do, the more experience we have, and our gut feeling becomes a bigger part of making a decision. But eventually, as the market shifts and changes, we just have to adjust to it. So there will be a time when we lose a few back to back. It's just going to be part of what is going to happen if you're doing 30 flips at a time. But so far we've been very fortunate to not have too many of those happen, because we've done as much due diligence as we're able to do for the current circumstances. The average deal that we're buying, from the time the wholesaler sends it to me to the time my escrow is in their account with an executed contract, is typically a couple hours. So it doesn't give me a whole lot of time to do a ton of due diligence, but I'm able to at least get into the property, run thorough comps, cross-reference the comps with my partner, have her run comps, look quickly at what needs to be done, do a quick analysis of what the rehab is going to be, maybe hedge a little bit for certain areas where it might take longer and the holding cost might be greater. And then ultimately, you got to make a decision. You got to take action. You can't sit there and think about it too long, or else you'll lose the deal. So that's the approach we've taken, and so far it's worked.
Wow. So you got to make a decision about buying a property within 1 to 2 hours.
That's been my experience down here in Miami. In Broward County, you have a little bit more time, and that's not always the case. Every now and then I might get a deal directly where they're like, hey, let me know, and I might have a day to make that decision. But in a wholesale business, most of the time, you're not dealing with the person directly. You're dealing with a daisy chain, right? So you got the person who actually has the deal, and then you got another person who found the deal for you, and then you got you. So you got 3 different parties, and most likely other people looking at it just like you're looking at it. So it's not ideal to make a decision in an hour or two, but we've become comfortable with doing that. If everything looks like we've seen it before,
right?
You know what I mean? It's like, like a quarterback looking at a defense, and they call an audible because based on what they see in a couple seconds, they're like, okay, I know what they're going to do. I got to call an audible. Like, that's kind of how we have to play the game of flipping. And if we see a defense that we haven't seen before, we got to call timeout. And timeout might be, we got to pass on it. You know what I mean? We got to pass on this deal because we can't move on it that quick, and we can't take the chance and be careless.
Exactly. Yeah. So, all right, man. Let's talk about motivation. Like, what's your drive? What keeps you motivated every day with your job, with what you're doing, building your company, and where do you want to go?
That's an interesting question, because it's something, I think about all the time, and every year I get together with my wife and we try to plan for the future. And at the beginning, when you first start, it's money, right? And don't get me wrong, we're in it for a profit. But if it isn't something bigger than just making a profit, then eventually you lose interest or you find something else to do. So what motivates me is just being able to make a difference in the lives of the people that are buying this property and the people that work with us, that are making a living, that are depending on us to make a living, and growing other people. Providing a great example for my kids, my 2 girls, being proud of the fact that we're getting stuff done, that we're making a dent, in the universe. And it goes back to just, what can I put together to make sure that I'm able to provide a life and an experience for the people around me that, wouldn't be possible otherwise, or that are bigger than I thought could be possible. So those are the things that I'm always kind of, working on in my mind, and trying to um, uh, improve on. Because if you don't think about those things and you're just thinking about, well, how much money can I make, that gets boring, or you kind of lose interest. It's not enough. Does that make sense?
Yeah, I totally agree with you. It's not enough, and then you make you probably make a ton of money, but there is a time when you feel like it's not complimenting you enough, like you're saying, and there has to be something beyond that. It's just it can't be just about the money. There has to be something beyond that. Also, as an entrepreneur, we always like to go, chasing chasing that goal, and then it's the process to make it happen to get to that goal. And I'm sure like once you reach, like you said, like what's the point when you have 7 properties, 8 properties, but then you wanted to go for more. You obviously were making money at 7. You're making a little more money with 30, 40, yes, but the process from 1 to 7 and then 7 to 40, I think is key, and it's something that as entrepreneurs we have to like. We have to really love going through that because we're going to fail, we're going to win, and we have to be okay with that. Just like
Yeah.
multiple hurdles, like you said, but whatever, you went over them, and here we are.
I'm in love with the process. I'm in love with the grind, and I'm in love with growth. My wife keeps me in check a lot of times because she's like, okay, look, you're growing too fast, or you're getting too risky, or you're getting too aggressive, or do you remember 2007? You know what I mean? So she's a good balance. And you have to have people like that in your life, because if it was just me, if I was just single and doing my own thing, I'd probably run right off the cliff. It's just who I am. Sometimes I get into my thing and get into the journey, and I put blinders on. So I love the process. I love the journey. It's fun, and I think that's another thing. You got to have fun. Even you can't just do the things that are fun, but you got to have fun doing it. If that makes any sense. Like, nobody wants to make cold calls. That's not fun. However, if you can make it a game, and you can have fun doing the cold calls, partner up with somebody, or say, hey, let's make some calls, and then let's see how many contacts we make, or if we've set an appointment, let's go celebrate, and whatever the case may be, let's go have lunch together. Just doing those little things, and kind of and falling in love with the process and the journey, and enjoying the ride. It's not the destination, right? They say that all the time. It's the journey, not the destination. So for me, it's not so much, hey, when I get to 30 and I have a pile of cash, that's the reward. For me, the reward is getting from 7 to 30 and being able to do it in a way where people can benefit from it, and I can bring a team with me to heights that they didn't think possible. That's the fun part for me.
Yeah, man, it's pretty awesome. Well, Ralph, thank you so much for sharing your story today. Really, I really appreciated having you today on the show and taking the time to have this conversation with me. And hopefully we can do it again in the future.
I'd love to, man. There's so much that we can cover, and there's so much to talk about. Hopefully my story is just kind of broken the iceberg, the tip of the iceberg. But I'm glad to contribute, and I'm glad to help. I think this is a great platform that you're creating, and a great resource. And I hope that people found it helpful.
Yeah, no, of course. And like I told you the other day, I think I mentioned that to you. Like, for me, like, it's a lot of value on the information that we're putting out there, and a lot of people is going to learn from that. A lot of people is going to learn from you. They're going to relate to your story, and then they're going to learn from your story. And I can be one of those. I'm one of those too, because I'm also a realtor and a real estate investor. And then I'm going through the process, and then meeting people like you that have reached a certain level, that are a certain level of success. I can definitely relate to you and learn from you as well. So that makes me excited, and that makes me want to do this even more. Because I want to meet people like you and talk to people like you and pick your brains and learn from them. So I'm really excited about that. And like I said, I really, really appreciate you taking the time to do this call with me. For
My
real.
pleasure, man. Thanks for having me.
All right, man. Have a great day.
All right,
Thank
you
you.
too.
Bye.
Bye bye.